Hello everyone, in today's video, I will demonstrate how to effectively trade the option wheel strategy using this comprehensive option and stock trading journal. I have previously created a tutorial video on this option and stock trading journal, and I highly recommend watching it if you haven't already done so. It is designed to monitor your option and stock trading performance and activity over a 12-month period. This trading journal now features new additions that simplify the tracking of your option wheel strategy. If you are new to the wheel strategy, don't worry, I will provide a brief explanation. The wheel strategy consists of three main strategies: cash secure put, buying or selling stock, and covered calls. To implement the wheel strategy, start by selling a put option and collect the premium. If the put option you sell ends out in the money by the expiration date, you will be assigned 100 shares of the stock. Once you have 100 shares of the stock, you can begin selling call option and collect premiums. If the call option you sell ends out in the money by the expiration date, your 100 shares will be called away. Remember to only engage in the wheel strategy with fundamentally strong stocks like Apple, Amazon, and Google. It is crucial to sell call option at a higher price than the price at which you bought the share. In this video, I will demonstrate how you can easily trade your wheel strategy using this trading journal. On the Start tab, input your chosen strategy such as cash secure put, covered call, stock assignment, or any other names you prefer. Here is an example I have prepared for you. On the trading journal page, input the trade number, select the trade direction from the drop-down list. For cash secure put, choose long since you anticipate the price to move out. Enter the stock ticker, select the strategy from the drop-down list, enter the strike price for the put option, expiration date, break-even price, stop price at entry date and time, number of contract, net entry price, and entry commission. In the risk management section, input the buying capital, which is the amount of money blocked by your broker for holding the trade. If you have a margin account, the buying capital should be a fraction of the amount of money needed to buy the shares if you are assigned them. The net profit represents the premium you collect when opening the position, while the net loss represents the amount of money you will need to buy the shares if you are assigned them. For example, if your put option expires in the money by the expiration date, you will be assigned the shares. In the close position section, simply input the stock price at the exit date and time, number of contract, and the net exit price. Since it's stock assignment, the exit price should be 0. If you are assigned the share, enter the relevant details into the journal like trade number, select the direction, long since you anticipate the shares to rise for profit, enter the ticker, select your strategy, enter the stock price at entry date, enter the entry date and time, number of share, one contract equals to 100 shares, and the price at which you bought the shares. Input the buying power, which represents the amount of money you use to buy the shares. Once you have 100 shares, you can sell a covered call. Input the trade number, select short from the drop-down list since you anticipate the price to decrease when you sell a call option. Enter the stock ticker, select the strategy, input the strike price, expiration date, break-even price, stop price at entry date and time, number of contract, net entry price, and entry commission. Assuming the company stock you are holding goes to 0 by the expiration date, the net loss for the covered call would be the total value of the shares you bought minus the collected premium. If the call option you sell expire in the money at the expiration date, the 100 shares of the stock you are holding will be called away. For stock assignment, input the stock price at the exit date and time, number of shares, and the price at which you sold the stock. For the covered call, enter the stock price at exit date and time, number of contract, and net exit price, which will be 0 if your shares are called away. The green color cells will automatically calculate the trade duration, total profit and loss, return on investment, P&L per day, cumulative P&L, and win or loss status. Some of you may wonder what to do if you still have open stock position at the end of the 12-month period. In that case, I recommend closing those positions and opening new ones at the beginning of the new 12-month period. Moving on to the ticker dashboard tab, this new feature allows you to track the profit of each individual stock involved in your wheel strategy. Simply select the ticker from the drop-down list, and it will display all the associated trades on the table below. For example, I have executed cash secure put, stock assignment, covered call, and bull put spread on Bank of America. If you only want to view the profit made using the wheel strategy on Bank of America, use the funnel sign on the strategy and check the bull put spread. This will show the profit and loss specifically for the whale strategy. Additionally, it will provide statistics such as average win and loss, largest win and losses, maximum consecutive win and losses, long and short trade, total return on investment, and average time in trade. The graph will display the profit and loss for each strategy you deploy. That concludes the tutorial on how to trade the whale strategy using my option and stock trading journal. This trading journal is not only suitable for the whale strategy, but also for other strategy like single leg and multi-leg option strategy, as well as stock trading. For more information about this trading journal, please check the link provided below. If you found this video helpful, please like, share, and subscribe to my YouTube channel. Thank you for watching and see you in the next video.